After being one of the best stocks in the market for 20 years, the market has turned on Alphabet stock. Shares are down from their high just in January, and investors seem to think that this company is going to be disrupted overnight by artificial intelligence companies like OpenAI, Anthropic, and Perplexity. But is that really what's going to happen? And where is Alphabet stock going to be in 5 years? I'm going to answer where I think the company is going to be in 5 years. And let's start with the search conundrum that the market is so obsessed with right now. Artificial intelligence is definitely taking mind share from search. OpenAI has 400 million weekly active users, and that's from a company that very few people outside of Silicon Valley had heard of 3 years ago. Perplexity and Anthropic are also gaining popularity, and Apple recently said that searches on Safari were down for the first time ever in April of 2025. So after growing for decades, is the search business dead? We're not seeing that in the numbers, at least not yet. Search revenue is still growing double digits, and the segment is extremely profitable. You can see here that over the past year, Google services, which includes search, YouTube, network revenue, subscriptions, and platforms, has generated $126 billion in operating income. So the numbers are telling us that search continues to grow, but there's no question that there's concern that search is going to be disrupted. But businesses like this don't typically die overnight. They stagnate and stop growing. I think a decade from now, search is going to be something that a lot of people continue to use, but they're going to add artificial intelligence to what they're doing on their computers and on their devices. There will be a use case for both products. Just like there was use cases for PCs after mobile phones came along, just like dial-up internet survived for a very long time when cable internet and fiber internet proliferated around the US and around the world. But there's a lot going on in Alphabet beyond search. There's, of course, YouTube. This leverages the advertising business that Alphabet built for the search business. And today, YouTube, including advertising and their premium services, is over $50 billion in revenue. That is bigger than Netflix. YouTube doesn't break out their profitability numbers, but remember, YouTube doesn't have to pay for content. People like myself upload content to YouTube, and it's just a revenue share agreement, and a relatively low revenue share when you compare to companies like Spotify. So just this business alone could be worth hundreds of billions of dollars. For perspective, Netflix is worth almost $500 billion. And like I said, YouTube is a bigger business by revenue and by the number of users than Netflix is today. On top of YouTube, you have what Alphabet calls subscriptions, platforms, and devices. This includes YouTube TV, Android, the Play Store, Pixel phones. There's G Suite. Lots of businesses are included in this segment, and you can see that it's growing consistently. Over the past year, the segment grew 17%. And this is a big business at $42 billion worth of revenue. And then you have the cloud business, which has become a behemoth, $46 billion revenue run rate over the past year, growing at nearly 30% on a compound annual growth rate basis. And those margins are improving rapidly. In time, I think those operating margins are going to get to 20, even 30%. This is where you're going to see the benefit from all of Alphabet or Google's investment in artificial intelligence, their acquisition of DeepMind, their Gemini models, which in many cases are outperforming OpenAI, Anthropic, and other model makers. This is also where you're going to see Google leverage the infrastructure that they've been spending decades building, taking milliseconds out of the time to complete a search. That time is going to be very important in artificial intelligence because the time to answer questions is going to be key for not only users who are using products like Gemini, but also developers who are building their business on top of these cloud services. That's what gives Google Cloud an advantage over AWS, over Azure, and over other cloud services. On top of those segments, you have Waymo. Waymo doesn't get a lot of discussion with Alphabet, but it's a business that could be very significant for the company in time. 250,000 rides per week right now and expanding extremely rapidly. Just announced that they're going to be going to Boston and Dallas. And they're also expanding internationally in Japan, with operations expected to begin in Tokyo potentially next year. And then there's Google's vision of an artificial intelligence future that could potentially disrupt itself before companies like OpenAI and Perplexity do. Remember that Google is building their models in-house, and they potentially have big advantages over competitors by doing that. They have the capital to invest hundreds of billions of dollars in infrastructure, in talent, and in building those models. They have the capital that no other company has. Remember, OpenAI continues to go out and raise tens of billions of dollars because their business is losing money. Google has the money to invest on their balance sheet. They also have custom infrastructures. Their TPU chips are the most performant compared to NVIDIA. But as everyone tries to build a custom chip to break away from NVIDIA's power in the market, Alphabet is already there. And as Alphabet and Google figure out what the future of artificial intelligence is, they have more points of distribution than any other company. They're putting AI overviews in search. They have Android, they have YouTube. There's many ways the company can leverage existing infrastructure and distribution to remain relevant beyond search. So what's the bull case for Alphabet stock once you tie all these industry dynamics together? I think search is going to live a lot longer than most people think. It's easy to see disruption coming. It's hard to remember that these companies that get disrupted still make money year after year after year. The problem for us investors is when you pay too much for a company that's being disrupted. I'll get to that valuation in just a second. It's also pretty easy to make the argument that Google and DeepMind are ahead in artificial intelligence. Not only do they have technology and infrastructure advantages over companies like Open, their models are now more performant, not only on the LLM side, but also in images and videos. That could potentially be a differentiator for not only their cloud services, but also for their consumer products. Another key is that Alphabet has been building an advertising business for decades. They can monetize artificial intelligence better than any other company. OpenAI is trying to build a subscription model that may be successful for a small number of users, but most users, just like in search, don't want to pay for a product. They want to get their AI answers for free. And how do you monetize that? Advertising is the way to go. And no company has a bigger advertising business than Alphabet. And of course, there's those long-term growth businesses, YouTube, platforms and services, the cloud, Waymo, and all of the artificial intelligence tools that they're building. You get all of this in Alphabet for an extremely good value. The price to earnings multiple for Alphabet stock, as I'm recording, is just 17. The enterprise value to EBITDA, proxy for the cash flow that's coming from a business, just 13.2. If you go back to the mid 2010s, that's what Apple stock was trading for when Warren Buffett was buying the stock because he saw a much brighter future than the market saw. I think we're seeing the same thing with Alphabet stock today. You're getting a great value, you're getting growth businesses, and a lot of optionality if there's not significant disruption in their core search business over the next decade, which I think tends to be overblown right now. But we do need to acknowledge the bear case. Alphabet is the incumbent in this situation. New technology companies tend to disrupt incumbents over time. The worst case scenario is that Alphabet becomes the BlackBerry of this generation. The iPhone came out and the BlackBerry essentially became obsolete overnight. Could artificial intelligence do that? Hasn't done it yet. But it's very possible in the future that Google search is not something we're using on a daily basis. Something like ChatGPT or Perplexity is. The growth momentum is also with those competitors, at least on a user basis. OpenAI and Perplexity are adding tens or hundreds of millions of users to their platforms, and they're beginning to build out business models as well. Their revenue is growing significantly, even though they continue to burn cash. On the cloud side, the cloud is very competitive and depends on increasing demand from commercial customers. AWS, Azure, Oracle, these are all massive competitors who want to continue to grow their market share in the cloud. That's going to be pressure on Google Cloud, which could see its growth slow from around 30% right now to significantly less than that in the future. The market is also a forward-looking mechanism, so we need to keep in mind that sometimes when stocks are trading for values, there's a good reason for that. It's what you call a value trap. A stock looks extremely cheap, but it isn't because the business is in structural decline. If that ends up being the case for Alphabet, then the stock will continue to underperform the market. So what's my prediction? I think Alphabet is a much stronger company than a lot of investors think. I think the valuation is just too cheap to pass up. Search is ingrained in the way that people work, in the way that they live, and it's going to take much longer to disrupt than a lot of AI proponents think. And the advertising business, which is really Alphabet's core, stretches well beyond search. That will still be leverageable on platforms like YouTube and YouTube TV. And that ad business is almost impossible to replicate. Speaking of YouTube, I think that's the kind of platform that's essentially untouchable right now. That's where user-generated video content is going. I don't think that is going to change in the future. So that is an extremely valuable business. Google Cloud continues to be a point of strength, and Alphabet's AI models continue to get better and better, not only on benchmark indexes, but consumers are also seeing better answers in things like AI overviews. And let's not forget that subscriptions, platforms, and devices continue to be a growth business that can be leveraged long-term. And there's Waymo. Waymo could be an extremely valuable business long-term. On top of all that, if the market doesn't appreciate Alphabet stock, the company has the cash to continue buying back shares at a relatively rapid rate and just return that cash to shareholders. That alone could help push the stock higher over the next 5 years. It's not every day that you get a company of this quality at this low of a price. I think over the next 5 years, Alphabet stock will at least double in value as some of these growth businesses continue to perform well and investors realize that the search business isn't dying as quickly as you might think. Now at the Motley Fool, your comments always make us smarter, so please comment with your own research and insights about Alphabet. What is your prediction about the stock? And of course, check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. See you here next time.